Help us understand, what is a narrow bank? How does it fit with this idea of full reserve money? How does it fit with this idea of digital currency?
Sure. Thanks, Jeremy. Maybe I should introduce also the concept of synthetic central bank digital currency, so that our listeners can follow more easily.
That would be fantastic.
So a synthetic central bank digital currency is essentially a private-public partnership where the private sector issues a liability that is used by you and I to purchase assets for payments. But that liability is fully backed with central bank reserves. And that liability is issued under license, license that the central bank would extend, and in exchange for the central bank to obviously supervise and regulate the business and the institution. So this is different from what people originally called central bank digital currency, which would entail the central bank issuing a liability directly to the public. So either we hold an account at the central bank, or we hold a little digital token on our wallet issued by the central bank, and we trade that. So there's a fundamental difference here because the private sector is an important player. And when we spoke to central banks about central bank digital currency, they would all say that, well, there are advantages, there are disadvantages as well, but there are advantages, so it's interesting to consider this. But of course, it's very costly, it's very risky to the central bank, and it might deter innovation. Mm-hmm. So this private-public partnership is intended to conserve the comparative advantages of the private sector to interface with clients and innovate, and the comparative advantage of the central bank to regulate and provide trust. Now, of course, this is similar to a narrow bank because this is a specialized payment institution that issues liability that are fully backed with central bank reserves. But I would like to avoid the term narrow bank because it's so charged. This is not a narrow banking license that the central bank would issue. This is a special synthetic CBDC license that the central bank would issue, and that would have all sorts of limitations in order to avoid problems of financial stability. And I guess we'll speak about that later in the program.